Hey everyone, my name is Vince and welcome to my YouTube channel. Since this is my first video, I'll start by talking a little bit about what you can expect from the channel, and then I'll jump into the actual content of this video that will of course also be the content of future videos. So in short, this channel is going to be a weekly log of my finances. So it's going to be what happened with my investments. So that's, the M1 account that you see here. I have a few different ones that I want to walk you through and show you what happened with my bank account. So I use the M1 Spend bank account, as well as I also have a Chase account, but I don't do too much banking on that. And then I also have credit cards. So I want to show you what I'm spending my money on, why I use a few different cards, and just take you through the overall process of managing money as a whole. This is also going to allow me to share ideas and receive feedback from the community on best ways to build wealth. So really, I just want to motivate people to start investing, teach the importance, but then also, learn from you guys as well on how best to manage wealth and build wealth. So I'll take you back real quick, sort of how I got into investing. So back in college, I was about 19 or 20 years old, and I really just was playing around with some stocks that I had really done some light research on. It was nothing serious. It's just really to get money in there and hoping to start building somewhat of a portfolio. There was one story that actually stuck with me. Is I was at my parents' house. They were moving from one house to another, and my dad was digging up all these old statements that he had back when everything was, actually in paper and not electronic. And he had this big binder, and a lot of the statements that he was showing me, it was crazy to see the increase in both, what he was depositing into these accounts, but then also the market gains from these accounts. So that definitely had a huge impact on me. I had always found it important to be in the market, and 6 years later, I'm still here and have been fortunate to build up a nice cushion for myself going forward. So here we are today. Big difference from then, where I was paying $10 a trade on TD Ameritrade. So now we're at M1 Finance. Everything is automated. Everything is no cost. And same thing with Robinhood too. I actually had started on Robinhood, and I had moved away from the platform. I was doing I felt like I was doing too much trading. So because there was no fees and it wasn't as much of a formal process as M1 Finance is, I found myself just constantly buying stocks and then selling them at profit, or just making erratic moves. I had made a few good moves on Robinhood, and I made a pretty good portion of what I've of my total value. I think I made like $10,000 in profit or so from Robinhood over the years, but I just felt it wasn't a long-term strategy. I was selling stocks that I wish I kept, and I was also buying some stocks that I ended up losing a lot of money on. So, it was profitable for what it was worth, but at the same time, I felt I needed to sort of mature my strategy a little bit and make it a little bit more consistent instead of such an erratic thing. So here we are today. I'm on M1 Finance, so I'll take you a little bit take you through this account. This will be my first account that I'll show you. I have 3 of them here, and then I have 401k that I want to show you, and then I'll jump into some of the credit card information and what I have outstanding. Before I get too far into it, so I have over $90,000 total, basically, that I'm working with, and this is essentially a third of that total. So this portfolio started September 21st, 2018, so it was about a year and a half ago or so, and I wasn't really sure how I wanted to approach this account. It's really nothing crazy. I'm definitely not an expert or anything like that. It's really just to have money in the market, earn dividends, and then also, grow my portfolio. So every week, what I have is set up as is depositing, I believe it's $65. So yep, I'm putting $65 in this account, and what it does is basically just puts the $65 in, and then it disperses it based on the percentage that you have listed here. One of the things that I love about M1 Finance is it automatically alters the percentage of money that is put in based on how your investments are doing. So, you'll see here that this one is 17% of 18%. What it's going to do is it's just going to, the next time that it invests the money that I put into the account, it's going to try to bring this up to 18%. It doesn't sell anything that's over. So if I look at like this one down here, it doesn't sell it unless you remove it from the pie here that you see. And that's one of the things that I really like about it. Is it's tax advantaged. So what it essentially helps you avoid is having to constantly sell at gains. So like if I was at a gain here, then it would sell the 0.6 to make it, help bring this one up. And it doesn't do that. So it just doesn't invest in the ones that are over, and it puts the money into the ones that are under. So you'll see here, the last trade that I made was on the 2nd, and it only bought 2 companies or 2 stocks. And you'll see here that it just evenly distributed the value. Not evenly, but it distributed the value based on what percentage that these stocks were supposed to be. So that is sort of just a little bit about the M1 Finance portfolio. I'm sure that a lot of you have seen this already, but really what this is going to be is since it's going to be a weekly log, I'll show you sort of where I'm at a weekly basis. So over the last week, I had $31 in market gains. There was no dividends. Last month was more of a dividend month. I had about $127 in dividends on this account, and the market did pretty well last month, so I was up almost $1,000 just on that for a 3% return. And then basically from a year perspective, so if we go back a little bit, I'll also show you sort of how it did last year. So if I go through this, you'll see here that there was some drastic jumps, and that's really just from me switching from Robinhood to M1. I had done a lot of changes in the accounts, so I was moving, you'll see here there's like a $15,000 jump, and then that one's a 10. So I was just kind of trying to figure out what I wanted to do with the portfolios, and this is sort of what I settled at. So I basically just picked a bunch of ETFs here, and now I've sort of set the schedule where I'm doing $65 every week from my spend account to this account, and it just auto invests the money for me, so I actually don't even really need to check it, but of course I do, because this is something that I really enjoy monitoring and taking a look at. So that is how my retirement account is doing. It says pre-tax here, just because it's indicating to me that I have to pay taxes on it if I were to withdraw the money, but I have it listed as retirement. The good thing about this account is if I ever did in fact need the money, it's not a true retirement account to where there's any type of penalty or anything like that, so it's just kind of for me to note. So moving on to the Roth IRA. So with the Roth IRA, there's certain guidelines, so you're only able to put in $6,000 per year. I believe it's $7,000 if you're over the age of 50. And so you can see here that I maxed this out. One of the cool things with M1 Finance, and pretty much every broker should have this functionality, is that it asks you after the end of the year whether or not you wanted to continue depositing into the 2019 account, or if you want to go to 2020. Basically, IRAs go from tax season to tax season, so it's not January to January like the regular year is. So you'll see here that I maxed out the account, but then now all my future transfers, I put in $90 every week. My future transfers are now going into the new account. So you'll see here, I made the first one was $350. I had previously had it set on monthly, that's why it's such a high number, but now I've changed it to weekly, especially with doing these videos. I think it'll be cooler to see money constantly going in every weekly update. So this account did fairly well. I had started it on February 11th, 2019, so it's been around for almost a year or so. So you'll see this account has fared pretty well over the course of the year or so that it's been around. You'll see there's a 20% money-weighted return. The money-weighted return is of course different than the regular return that you would see with like a value and cost basis. So obviously 20% of 7,000 is not 544. So really what it does is just takes into account how much money you had when you input the actual deposits and what the returns were based on those deposits rather than the full account as a whole. It really just gives you a more accurate reading because, let's say you make a significant gain, but then you deposit $50,000, it's going to look like that gain actually wasn't as much as it was, even though at the time it was a significant gain. So the money weighted return takes that into account and says, okay, how much money did you actually make? What was your actual real return, not just something that was inflated based on how much money you deposited or withdrew from the account. So when I look at the past week, I was down, a few dollars this week. There's not a crazy amount of money in this account to where, you'd see significant changes yet, but, hopefully I'll get there. And with my $90 deposits every week, that'll add another, leave close to $4,000 or $4,500 a year into that. And I may true it up at the end. One of the things I did recently was I put on the 3rd, I put the remaining amount that I had left over from 2019 in, just because I wanted to kind of max it out. So that gives you you have the option of that as well. So you can always go back and deposit that to make sure that it maxes out. Maxing out the Roth IRA is good because it's post-tax. So you'll see the designation here. Post-tax just means, at the time of when I believe it's 59 and a half, you can get the money out, and it's tax-free. So if this account goes up to $200,000 or $300,000, it's going to be all tax-free, so I can draw that down without paying a penalty on it, a tax penalty, obviously. So that's how this account's been doing. I'll keep you updated as I go forward with that. And then we have the personal bets account. So this one is kind of just the account that I use for playing around with some stocks that I pick. So I'm, again, like I mentioned, I'm not an expert. It's really just to outline and take you through this journey of me putting money into these ETFs and general, market stocks that show you, and shows you how you can build wealth even without being a guru stock picker. I do have this last account here just to show you some stocks that I do like personally, and things that I bet on in the future. I don't put too much of my income on here. If you look at the transfers account here or tab here, I'm only putting in $50 a week. So that's $200 a month, which is about 10% of my salary or checks that I get. And really, it's just play money. It's stocks that I want to take a chance on and maybe see good returns, but it's not anything that I'm actually risking significant portions of money on. These two are my main accounts along with the 401k, and those are going to be more steady. This is more of just like a things to keep an eye on, or things that I would like to invest in, but I don't want to stake the house on it, so to say. So you'll see here Paycom. This is one of the stocks that I have. It's doing really well. I had actually bought, so Paycom right now, if I click on it, you'll see it's worth, I bought it for $223 and it's now $272. I had actually bought this stock when it was $80 back when I was playing around on Robinhood, and it went up to, I believe, $170, and I sold it. So I got back in at $223, which I'm not thrilled about, but I am. It is up $40 since I did that, so I can't complain too much. But I think I had like close to 100 shares at $80, so it was kind of a missed opportunity for me. But these are the things you learn, and it wasn't as risky doing it this way. With these other stocks in here and doing it with these other accounts. So if I look at the past week, it's done, fairly well for just a week. It's up $60, bringing it to 0.51 money weighted return. And then all time, it's only been open for about 6 months or so, and it's brought in almost 5%. Not great on the dividend side of things. I think this pie only brings in, it only brings in about 0.92%. So it's not a great return for dividends, but there are more growth stocks in here, or things that I expect to or want to gain market value rather than dividends. So my other two accounts are a little bit more on the dividend side. They're not super high dividends. I think this one's highest, and it's only like 1.5. So it's really just to get the returns, but I'm not super dividend focused at this time. Maybe I'll end up switching down the line, but right now, really just this one's for growth. These are sort of both gains and dividends, and it's nothing crazy. If I switch over to the transfers tab, you'll see here that I have $6,200 just sitting in the spend account. So the spend account is sort of my day-to-day finances. I have M1 Plus, so it kind of acts as my bank account. I also get free withdrawals from ATMs, just at any location, and I get reimbursed 4 times per month. So I do find that it's pretty flexible, and you don't have to worry about necessarily having a bank, but I do have a Chase Bank just to kind of keep that available. There's some things that the M1 spend account can't do, like deposit checks, for example. And if I get a check, I want to be able to, of course, deposit it. So I keep that Chase account there just to kind of, keep or satisfy that requirement if needed. So you can see here the total of my 3 accounts is about $53,000. And then if we add on the spend, it brings the M1 total to $59,000. So that's sort of where I'm at right now. I don't really want to jump into the spend right now just because there's not much going on. But the spend account, I will note, I did just deposit that $1,500 to the IRA to max it out for the year. And so I should actually have a little more than this. I do like to keep it a little bit higher. I like to have 6 months of living expenses. So I generally estimate that my living expenses are about $1,500 per month. So that's, of course, in the event that, crazy thing happens, I lose my job, or something is drastic change in my life, medical expense or something like that. I like to have it just available just in case. But so I'll bring that back up over time. I think right now, even though I did max out that IRA, this will be fine for now. So I'm going to go ahead and jump over to the 401k in a second. So just give me a sec to pull that up. All right, so what you're looking at right now is the 401k. So this is my employer 401k. Basically what happens here is I put 15% of my checks into the 401k. That comes out to about $466 every check. So that's twice a month. And my employer matches 3%. So it brings it to a total of about over $550 per check, which is pretty nice. And it goes into here. And this account is very similar to what I have going on in some of those M1 accounts, where I'm just investing in sort of general market funds. It's nothing crazy. It's nothing super advanced, but it does get the money in there. And, the returns have actually been nice. The first year that I had the 401k plan, I think I didn't make any money, or actually lost a little bit. And then the second year I had like a 30% return. You can see it on the screen here. It's 30%. So, it does depend on how the funds are doing, but the money is in there, and I would recommend always depositing money into the 401k because, especially if your employer matches, it's literally free money. And just by getting the employer match, you're making 20% on whatever you're depositing. So, for example, like if I'm depositing $400, $450, and my employer's matching the 3%, $450 getting another 90 added to it is almost a 20% return. So that's just 20% just for getting the money in there, and it's worth it. So even though they're matching up to 3%, and 3% might seem small, you're actually really getting a percentage of what you're putting in. So if you're putting in, like I said, $450 and you're getting almost 90 back, that's a 20% gain right there. So it's worth it. I would recommend always utilizing the 401k. The only thing I don't love is that there's management fees and things like that. So you can see there's $105 was put in for management fees over the course of the year, but overall it's not terrible. And then of course the funds have their own management fees. But overall, I wouldn't stress too much about that. You are getting the money, and my 401k is actually post-tax. So this money as well is, when I get this money out, it is tax-free. So that's always a benefit as well. So what I did here is I set the filters to the 1st of January of last year, and then it ending the 31st, which was the past Monday. Just getting it to the end of the year just to show you sort of how it did. Basically, I put in $17,500. I had that balance from the previous 401k. It was actually with a different provider. So for the year, I put in specifically $77,705. My employer matched $2,000 of that. there was about $105 in fees, and I made about $6,000 in market value. So that's always a plus. Just the money kind of being there and making gains on its own is always good. And then even on top of that, we had $700 in dividends. So that is an added benefit as well. So adding all the accounts together, when you look at sort of the dividend for the past year, we have $45 here. We had $700 in the other one, $75 here, and then this account is $300. That's over $1,000 just in dividends, and these aren't even really dividend focused portfolios. So, highly recommend, having these main market tracking stocks in there. They also pay a little bit of a dividend. That's an added bonus. So that's sort of where I'm standing right now. I have about, as you saw, 90,000 over the accounts. You'll see as the time goes on, I'll keep depositing. My 401k will keep increasing based on how much I'm depositing there. And then overall, really just seeing the market value change, the dividends. This is really going to be just a way to increase your overall wealth by utilizing the tools that both your employer give you, what you can do, and then also, what your investments will do. So I'm going to jump in real quick to some of my outstanding credit card bills and show you what I'm spending my money on. All right, so just for simplicity's sake, I'm going to do this on my phone instead. So, I'll pop the screen up on the left here. Basically, you'll see the two accounts here. I have about $665 in the middle account. That's like my Amazon Prime card. And then I have Visa Freedom Unlimited. That one gets you back 1.5%. And then the Prime card I really only use for Amazon and purchases and gas. So the Amazon purchases, I think, gets you 5% back. So that's always good. So for that one, I'm actually not going to click into them individually, but I'll take you through sort of what's on those accounts. Really just a lot of it is, food, gas, other things that I purchased like sort of around the holidays and things for the house. I actually threw a party for the holidays at my house. So some of that is a couple $100 for food and other miscellaneous items. One thing to note is for the bottom card, the Freedom Unlimited, that card I do have a purchase of $220 that will be refunded, so that will be actually a little bit lower. Basically, I was in the process of flipping some shoes, and I bought a pair of shoes that I'm actually going to end up returning. So that is going to be $220 less, so it will bring the total to about $700 or so, and then the $600. Both of these also are not to be paid in full on the next statement. So I think the top one only has like $270, and then the bottom one has a couple $100, and that'll be paid on the 6th, and then for the middle one, and then the bottom one will be on the 16th. So hopping over into my Apple Card, I also have one of these. It's not the greatest card, but I do like it for online purchases. It gives you 2% back if the company uses Apple Pay, and then I also use it for like my iPhone payment, which gets 3% back, and then for any type of services you get also 3% back. It's not the greatest card like I mentioned, but at the same time, I think the overall goal is to spend less rather than more. So even though you're not getting a lot of percentage back, if you're not spending that much money, it doesn't really matter. Of course, if you're spending a lot of money or you're doing things like traveling a lot for work, yes, I would recommend getting a good card that gives you, good mileage or, a better percentage back. But if the goal is to overall not spend that much money, then the percentage that you're getting back really won't matter that much. You're talking about, a few dollars here and there. But, I am someone that is in favor of saving money. So if you do find a card that gets a lot more than 2% back, it's rare. But if you find one, definitely I recommend it. Basically, so this was January of 2020, going back to, January just started, so the only payment was just like the Apple services that I pay for each month to kind of retain the iCloud storage, things like that. December 2019, this actually has another pair of shoes that I was working on flipping. Didn't work out, so I just honestly returned them, and I'll be getting $170 back for that payment. So that was that. I did a little bit more spending in November and October. Kind of went through like a little bit of a shopping spree, kind of drew some things up that I didn't have or needed. I don't love spending money on clothes and things like that. A lot of the times, or almost all the time, I think it's a waste. But in some instances, you're working in an office, or you're trying to be in front of clients. You need to get a wardrobe that meets those requirements, and that was sort of what I did. Some of it was personal, I will admit, but really overall, it's the overall goal is to keep the credit card bills down. So that's sort of where I'm at. That was this week. There's not much else that I want to go over for now, but stay tuned for the next week's video. I'll show you the change in all of the accounts that I showed you today. You'll be able to see the progression or the setbacks that I had to face. I'll explain to you sort of what I spent that money on, and going forward, I kind of want to keep this as an open dialogue and show you what you can do to also improve your wealth. So if you have any comments on this video, let me know what you liked, what you didn't like, and I will see you next week.